Good morning. It's Friday, March 21st. I'm Philip Streible, Chief Market Strategist at Blue Line Futures. So the markets are experiencing some pressure with warning signs coming from Nike and also FedEx. You also have a fire at the Heathrow Airport in London here. So it's putting a risk-off sentiment across the board in many of these different markets. Now, one of the things we do and we look at every day here is the strongest markets based on technical strength. It remains the same here, and it's been the same through most of the week here with gold, feeder cattle, and copper all rallying yesterday. They're tacking on about 1/3% on up to a half. Take a look at that feeder cattle chart. It is something that has been strong and powerful for quite a while here. Copper futures button up against that high. Gold futures running up into a trend resistance that we outlined in our chart pack that we emailed out. If you didn't get the chart back or you'd like to see it here, just a quick email that outlines a few different markets here, a couple key levels here, and looks at it from a big picture. You could register in the link below, and I'll email it over to you right away. So a quick look at the previous day's performance, leaders, and system trades. For system trades, we had none. We haven't had a trade recommendation here coming out of any of the technical systems here recently, as the markets are just chopping around a bit. Now, the performance leaders, we like to look at the movements in outside commodity markets to monitor opportunities and also inflation. So if you look at the performance leaders from yesterday, you saw lumber up 2.5%. There are mini and micro contracts on that. And I think that some of the tariff talk with Canada had really brought that market back into perspective. We're seeing orange juice, which has been in a steep decline for quite a while, bouncing off a key level of support. We had oats up about 1.2%. Remember what Dennis Gartman would say? Gentlemen, never trade oats. And then crude oil, that's the one that I've been identifying and monitoring. Many of the clients that are working with me closely have been taking positions on in the crude oil market here, tacking on about 1.7% with some Iranian sanctions being put into place. Now, natural gas, one of your worst performing commodities, down about 6.5%. There is a head and shoulders pattern and breaking a critical level, a trend line here that we've identified to the downside. And then finally, we had the VIX coming off about 1.7%. So volatility, it died down over the last couple days here, but I'm expecting it to surge up just a bit here today with the markets under quite a bit of pressure. Now, looking at the precious metals overnight and some things to watch in today's trading session. You do have gold under pressure, down about $7 at 30.36. Looking at the April gold futures, your critical level of resistance, 30.61, 79, and 30.94. The pivot point's going to be 30.47, and your support below is going to be 30.29, 30.14, and 29.96. Now on the May silver, down 45 cents here at 33.54. Like to see that market move back above what was old support, now new resistance at 34.06. So gold technically hugging that upper end of the trend line and starting to come off a bit. Significant levels in gold, obviously 3,000, 29.50, 28.85, 28.50, and 27.85. Those are the levels where I look at that 10-ounce contract here for long-term positioning to the upside. Not a recommendation directly to the public. It's just an observation that I put into play and some things that I look at with the clients that are working with Blue Line Futures. Now, China had written some negative stories about gold, the volatility in the markets, and I really believe that they are writing this negative story here, this negative headline, to help drive out speculators, bring prices lower so they can continue to add to their stockpiles as they've been doing here over the last year to year and a half. Now, the gold-silver ratio is something interesting, back to 90-1. So at what point does silver get too stretched from the gold market again? Time will tell on that. It's been about the 91 to 92 area where we've seen snapbacks in that silver market. So silver just doing what silver does right now. So in no man's land after testing that $35 an ounce. The significant levels, $33.35, $32.20-ish. $31.30 and $28.50. Below that, it's time to start stacking those COMEX warrants again, those warehouse receipts, and things like that. Now, looking at the ETF flows from the previous trading session, gold only adding about 10,000 ounces. Silver only adding about 88,000 ounces. This is smaller than what we've seen recently. So traders are looking at, hey, the prices haven't been continuing to the upside. It may be time to take some chips off the table here. And we see a lot of times that front run. Thursday session into Friday session, we get a little bit of a correction in the market. So year-to-date change, 5% gain on ETF flows into the gold market, and still negative 0.2% on that silver market. So silver just can't get what it's going from that outside investor here, from the ETF flows and things like that. Copper futures up 27% since the start of the year, and US manufacturers are paying those costs that are already priced in a hefty tariff here. You've got aluminum, the premiums in the US, they reached a record high last week when Trump blanketed a 25% import duty that came into place. So that's another market on our radar, is the aluminum market. Now, other markets on our radar, sugar. You've got years of drought in Mexico. They kind of fractured the exports over to the US. Shipments from Mexico are expected to fall to a 17-year low in 2025, and a possible 25% tariff on goods covered under the North American Trade Agreement could further drive a wedge and boost sugar prices. Crude oil futures, they had increased with pressure in Iran in sanctioning a Chinese oil refinery and its CEO after allegedly buying Iranian oil, which has driven up prices. So the U.S. is pushing for a nuclear accord with Iran with a 2-month deadline with maximum pressure campaign. This is why we're seeing crude oil futures kind of start to turn back up to the upside. If you look at that 60 to 65 region, draw a trend line across that we've seen for quite a while. 63.50 has been kind of your washout low. You wouldn't want to see prices go below there. And prices, if you start connecting some of these trend lines going down, you can see that in those low 70s, 70-ish area here would be your next resistance point. On the corn market, we did see it climb for the second straight day as U.S. exports exceeded market expectations. We've got strong demand from Japan, South Korea, and Mexico. So some key events that we're going to see today, and this is where the volatility and the fireworks kind of come into play, and then the market kind of dies down. So we've got two-sided volatility, and this goes from yesterday on Thursday with the impacts of the trade war, and then this outshadowed the latest round of housing data and jobs data. But today, option expiration coming. The market is set for the biggest test on Friday when an estimated $4.5 trillion in options contracts are set to expire at what is known as triple witching, and oftentimes stokes early action volatility, and then the markets kind of anchor themselves around key levels. So if you're trading stock options, you're going to want to keep a look at and a focus on that. So had to shoot over to the new house, check it out in the morning, see how a video would go in here. Very loud, very echoey because of the fact there's no furniture or anything in that. I've also got the in-laws at my house right now, so I had to get out of here and push on over to the new place and just do a test run here on a video. But you guys got any questions, give me a call. Remember to register for that chart pack below, in which we're just making it very simple. Very simple. Just the key trend lines, the key trends that we're identifying, some levels that get breached where they could perhaps push on to new levels, and some hard lines in the sand on the markets, which a lot of people struggle with as far as risk management purposes and things like that. This is something we're going to expand on to other outside markets like the livestock markets, like the agricultural markets and things like that. I think it's very important to just keep things very simple when you look at your trading here, and then let the technicals really drive the price flow and where you're going at, and then use the fundamentals to reaffirm your base case as far as whether you're bullish or bearish on a particular market. So again, you got any questions, give me a call, and remember that futures and option trading, it does involve risk of loss, and it may not be suitable to all investors. Good luck and good trading.